Good morning, everybody. It is the 17th of September. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Morning
Good
all.
morning.
How are we?
Yeah,
All good, thank you.
not bad.
Excellent. We're nearly there. It's Thursday today. Bank of England
Lovely.
Day.
Be a very big day, isn't it, today?
Yeah, quite a bit out on the old docket. It seems as though we finally got some action across markets yesterday. Things starting to get a little bit more volatile.
Yeah, not as aggressive as I thought it was going to be, but
No, so
we're having a
obviously we
bit of
had
a
the
pullback this morning as well, aren't we?
Federal Reserve yesterday, and officials held interest rates near zero and signalled they would stay there for at least 3 years, vowing to delay tightening until the US gets back to a minimum employment level and 2% inflation. So nothing particularly out of the ordinary, I don't think. But today we've got Bank of England policymakers. They've got the opportunity to signal to investors and economists whether they're right to predict more monetary stimulus later this year. So more on the conference rather than the actual decisions today from the Bank of England. I think everything's expected to remain as is on that front.
We had
Yeah,
Bank of Japan last night overnight as well, didn't we?
What was out from there?
The interest rates, they've done nothing either.
Okay, as
So
expected, I imagine.
yeah,
So we also had Australian jobs overnight as well. Employment was at 6.8% versus 7.7% expected. That was unemployment, so slightly better than expected. Although indices look like they're on the back foot.
yeah,
Um,
definitely are this morning, aren't they?
yeah. Anything pattern-wise standing out on the charts for you there, Steve, on any of the
Yeah,
indices?
but it's not going to be good news for everyone because what I've done is that I've added a few of the sort of like the indicators that are very commonly used, and the Ichimoku cloud as well is a really good indicator to sort of like explain whether you're in a trend or not. As you can see from the FTSE, we've got the cloud and we're just sideways, and we have been sideways since the recovery from the sell-off, and just no trend whatsoever. This is showing you why it's a difficult. So this is slightly below the cloud, so it's slightly bearish. On the other hand, we've got the DAX, the German 30. That's looking a little bit more positive. At this line at the bottom is the ATR. That's the average range over the last 14 days. You can see from back in March, we've absolutely collapsed. But we're back to sort of like the previous sort of averages. Actually, we're still above it. We're still sort of inflated compared to what we would have done over the sort of previous years, around about 150 points a day. We're still double that. So it's still, there is still volatility in there, but it's widely accepted. CAC again, really flatlining. SA40 also in the cloud, so we expect a little bit more volatility to pick up. There's a potential for it to break lower. The Dow Jones, the US indices, all a bit positive, all sort of like, but they all feel like they're sort of, there's a little bit of just hot air inflating them. I think that's what we can put it down to. Again, we're sort of seeing these upward moving sort of wedges, triangles, which are a bit scary looking, really, overall. This is China 50. Just get rid of these old lines. Bit of a sort of descending triangle here. Are we going to fail, or are we going to pop higher? I think we're going to fail. So I think we're looking for a break of the cloud and this previous swing low. Aussie 200, again, that's just broken below the cloud, and we've seen this sort of aggressive move lower this morning. And yeah, so it's basically, we're sort of just sitting in that middle. Very, very boring, but I think there's some sort of interesting moves to come in the next couple of months, and I really do feel it's going to be bearish, but we'll see. The charts will tell us.
Yeah, I mean, I don't see how it can't be bearish, really. I mean, we've obviously had this massive bounce that's been simulated from central banks, but
They must have run out of ink by now, surely.
they must have done. They absolutely must have done. Obviously, more fears over COVID as well. There was some speculation in the press today that there was fears of another 2-week lockdown in the UK, but I
yeah, okay.
think there has been people on TV to say that that's not the case.
I'm going to say, didn't Bonkin Boris say whatever happens, he's not going to go into lockdown? He was on telly like yesterday, wasn't
he
said a
always
lot of
changes his mind,
things.
though, doesn't he? Yeah.
That is probably the leading indicator.
Yeah.
So I wouldn't trust much that he comes out with. It just it's all a bit of waffle. But yeah, I think a national lockdown, I can't see it, just because I think it's sort of like the impact the first one has had. We still haven't seen the repercussions of that because of the furlough scheme extending things forward. I don't think they'll return the furlough scheme if they do lockdown. I just can't see them doing it. Localized lockdowns, I think. Because obviously we've seen huge rise in infection rates, but we've seen a huge rise in testing. So if we compare it, really, we've got to be looking at maybe the death rate, and the death rate is way below what it was. So I don't know. That's, for me, that's what I'd be more concerned about if the death rate starts to rise.
Yeah.
FX land, Ian, anything going on there that we should be aware of?
I'm just looking at I keep on talking about the same thing every day, but so I think that's the way it is at the moment. This is the dollar index going 4-hour chart. Now, what we have noted and what we do talk about a fair bit is obviously these retracement levels, and we say normally if you only get a 50% retracement, then you sometimes get a reaction to the upside and it comes back to 61.8%. Now, if you're an Elliott wave enthusiast, 1, 2, 3, 4 around here somewhere, and up to 5 to 61.8%. Now that isn't one wave, so it's making me wonder whether or not we're going to just get in this choppy price action. This is a previous swing high, so even though we got that move higher in the dollar yesterday, it has faulted. So really, at the moment, I think as far as the dollar index is concerned, we're in no man's land. You've got to get a breakout of this head and shoulders or this channel formation to the upside, I think, to continue the dollar buying. And really, it's too much of a risk to be selling dollars down to this level because the long-term bias is to the upside. So it really is sort of nasty at the moment. And I think the prime trade, if we get down to it, is here, which we've been talking about for weeks now. I think, at least it feels like it. It's 92.48, 92.39. So you've got a nice 10 pip sort of spread. And if you reflect that back on euro dollar, that looked like a nice breakout of the swing low, and all it's done is probably caught a few people offside and taken out a few stops, and it's started to move to the upside. We're in between sort of our bespoke support and resistance level, and we've got a resistance level up here, 119.65. And again, I'm just wondering whether or not we're going to sort of push higher just to get into those levels. Cable's interesting. I think this is bespoke resistance here at 130.14. So if the B of E are quite bearish today, I think that's a good level to watch, and it's near that 38.2% pullback level. And also, if you consider sterling to the downside, then you could consider euro sterling to the upside. And if a bit of a complicated chart, but our bespoke support is there, and it's literally just clipped it this morning, 90.83. So I'm wondering whether or not, although I think this is probably overstretched to the upside, this is an intraday chart, still 4 hours, whether or not we're going to get a corrective bounce with weaker sterling. But as far as the others are concerned, sort of dollar CAD, again, a previous swing high. That's a 50% level. So again, when the pullbacks are only to 50%, they're normally false pullbacks. And I'm just wondering whether or not we're going to get down to 61.8% again. And Aussie dollar, we got that wedge breakout. But again, is it just going to retest the wedge, or is it going to get all the way up here where our bespoke resistance is? So I'm very wary about people, or me in particular, getting caught offside on the dollar move at the moment. It doesn't look aggressive enough to me to be breaking out.
Okay. Thank you for that. Anything else? I mean, just on the charts, I think you've both covered it fairly comprehensively. Is there any other assets we haven't looked at? I guess we can have a look at the commodities.
Yeah, I don't mind having a look at those as well.
It's a similar situation though. I think we're just sort of poised for a move in some direction. This is gold we've got up on the chart now. It's a 4 hour. Again, it feels like I just keep going on about this triangle pattern, which we show some signs of trying to break out from, as we did yesterday, but now we're firmly back within that triangle pattern once again and awaiting some firmer direction. So nothing really going on there. If we look at oil, that's had a little bit of a corrective move higher in the last few days or so. So that's looking fairly bullish in the very short term, but I'd be looking still, I think, to sell that while that 43.70-ish level continues to act as resistance. And I think that is still that level that we were looking at some time back, the 61.8% level, and just a little bit of an overextension of that gap that was created back in March. So I still think it's a case of selling rallies in oil in the very short term. Anything on silver, Steve? I don't often look at it too much, but it looks like it's doing a bit more than what gold is. Have you got a chart to hand?
Yeah. I mean, it is, but it's in this sort of like tight range as I mentioned before. We've got the gold, which has broken above the highs. For me, that's the dollar. For me, still remains pretty long term. I'm still sort of pretty bearish about it if we really go back a long way. But I think Ian's right. In the short term, we've got this potential correction because it's
not a 93.13, is it, Stevie?
Oh, it's not far away. So I think we've got this potential for a correction.
93.26.
And also, yeah, and also we could get a little bit of a pullback in gold. Silver for me is prime to sort of like move higher. We might have a small pullback, but I think that should be bought. I still think we've got lots of potential in silver, but I think it'll really come with a dollar weakness if that happens. So I don't think anything in the real short term. Again, if we look at the daily chart, we can see it's looking pretty positive compared to the indices, although gold is struggling a little bit. But it does feel like these sort of like these positive moves into triangle formations normally continue. So, but you know, I think we've got sort of uncertain times ahead. Gold and silver are safe haven assets, and so I think more to the upside.
Okay. Okay, so gun to the head yesterday, and Steve, may want to double check this, but I had you stopped out on China.
Get the flock out of here. Seriously?
Yeah, I mean, it's very close. So if you can find a platform where you weren't stopped out, then let me know.
Ooh.
But
well, I set an alert, so it should have come through.
Yeah, I didn't see it, Stevie. I reckon Joe deleted it.
Let me see. Did an alert come through? What does it come through to? Does it come through to our analysis?
On trading view, it comes through to support analysis.
Hang on 1 second. Let me have a little snifty about. Trading alert, upper bound. Your alert was triggered at 3 o'clock.
Yeah.
Well, I stopped out. Yeah, I stopped out.
Yeah, high of the day.
Oh yeah. I don't mind doing that.
That used to happen quite a lot, Steve.
Yeah. Fairly sharp reversal after that.
Yeah.
That's trading in the afternoon. Steve only used to trade in the morning, didn't you, Stevie?
I think that maybe should we change Steve's cut off to midday then?
Well, what would it have been if I hadn't been stopped out? If I wasn't so aggressive with a 10-to-1 risk reward?
Oh, I don't know. It would have been maybe a couple of our.
Couple? You sure? The stop was tight. Oh, I don't care then.
I don't know. Anyway, so we had 3 trades yesterday. We make a call every morning on a trade idea there and then, and try and see how it plays out between that point and 9 o'clock in the evening. And Ian saved our bacon a bit yesterday with the win on dollar Swiss of 0.94R, and Steve and myself were stopped out. So a small pullback overall on our P&L. We've had a reasonable run over the last few sessions or so that's nothing too drastic. Anybody got any ideas for this morning?
Euro sterling.
Yeah, I thought you might. Go on then.
I'm already on it. I've already lost a few ticks. 91.10. So getting long euro sterling for all the reasons I mentioned before. 91.10. Target 91.98. Stop is just below the low, 98.31. Sorry, 98.31, 90.83, giving us 3.26 R
Lovely.
for a corrective move higher.
Okay. Steve, you all right if I go?
Yeah, go on.
I'm looking at New Zealand dollar, Swiss franc. On the daily chart, it's fairly bullish at the moment. This is the 4-hour chart we've got here. So we've seen a decent move to the upside, corrective channel. Then we've seen a breakout, and over the last few hours, a little bit of a pullback to potentially retest that channel before then heading higher. Just have a quick look at that on the hourly. Yeah, so there we go. I was looking for a little push above that 10-period moving average, which I got. And now I'm buying that at 61.17 with a stop loss. Let's tighten that up a little bit. Let's go there. 25 ticks, so 16.92 as a stop, and targeting a move to 61.85, which is 2.7 R from current levels.
Lovely.
Over to you, Steve.
I'm going to look at what let me down yesterday. What was I on? The China.
China.
Well, China can go flock itself. I'm going to go for Hang Seng. I'm going to sell it this morning. Like you said, the indices look on the back foot. If we do get a bit of a continuation, it may take a bit longer than a few hours to play out, but I'm going to say it anyway. But we have got this this line in sand. I'd prefer to sell a break of this when it comes in at 24,100. But as it's a gun to the head, I'll enter now at 24,310. Is it?
Just keep talking for a couple of minutes. You might be able to.
Yeah. And I'm going to have a target of down here, around about these swing lows, and the stop will be above this. Well, today's candle. Why not? 24. 610. How's that? Yeah, that looks nice, and we're going to go for that target. So a 6-to-1 chance this morning. Actually, 24,610 is within today's range, so it is a bit of an aggressive trade idea, but that's what I'm going for. Okay. Selling now. There's the levels. Selling now 24,310, targeting 22,510, stop at 24,610.
Okay. Let's see what happens.
Let's see.
Okay, so what's going to get these trades moving today in terms of news announcements? As we've touched upon, we've got the Bank of England rate decision at 12 o'clock. No change in policy is expected, but with an evolving situation surrounding Brexit and signs of a weakening economy, plus new social restrictions, there could be an interesting overview provided by the Bank of England about how they plan to tackle any further weakness in the economy. So keep an eye on that. Beyond that, we have at 1:30 US initial jobless claims. We also have housing starts and building permits at the same time. So possibly some volatility in the US dollar around about 1:30. So I guess we'll see how it plays out from there.
Yeah, lovely.
Anything else to add?
No, not really.
Okay, let's leave it there then.
Cheers.
Cool. Have a great day, everyone.
Enjoy. Bye.
Bye.